Sofi Technologies has just released their latest earnings report and the stock is on a roll, going up by almost 5% every single day for the past 3 days. So what exactly does the earnings report contain, and should you buy the stock? Sit tight as we take you through the earnings results as well as how they performed compared to analyst expectations. But before we do that, subscribe to our channel $1 World for regular Sofi stock updates. On the most recent financial report for the second quarter of 2023, Sofi Technologies Inc., a company that focuses on providing comprehensive digital financial services, disclosed its earnings. The report covers the period ending on June 30th, 2023, and showcases the company's performance in areas such as lending, saving, spending, investing, and financial security for its members. According to Anthony Noto, the CEO of Sofi Technologies Inc., the company achieved impressive financial results in the second quarter. They recorded another quarter of record-breaking performance, with a notable 37% year-over-year increase in adjusted net revenue. The company's revenue reached a new high due to exceptional results in its technology platform and financial services business segments, along with strong growth in the lending business segment. Sofi also attained its fourth consecutive quarter of record adjusted EBITDA, amounting to $77 million, demonstrating a significant 43% incremental adjusted EBITDA margin and an overall margin of 16%. Additionally, the company achieved a 36% incremental GAAP net income margin during this period. Noto emphasized the company's remarkable performance, attributing it to the diverse product range and unique financial services productivity loop, or FSPL strategy. During the second quarter, they added a record-breaking 584,000 new members, reaching a total of over 6.2 million members, which represents a substantial 44% year-over-year growth. The company also introduced nearly 847,000 new products during the quarter, resulting in a 43% annual increase, reaching a total of over 9.4 million products. The total deposits experienced a notable 26% growth, amounting to $12.7 billion by the end of the second quarter. More than 90% of SoFi Money deposits came from direct deposit members. These members demonstrated strong financial credibility, with a median FICO score of 747 for new direct deposit accounts opened during the quarter. Over half of newly funded SoFi Money accounts set up direct deposit within 30 days, leading to increased debit spending and continued cross-buying into other financial services and lending products. To ensure the safety and trust of their customers, SoFi offered FDIC insurance of up to $2 million, ensuring almost 98% of their deposits at the end of the quarter. The company's deposit funding strategy resulted in a lower cost of funding for their loans and increased their flexibility to optimize returns and capture additional net interest margin, or NIM, amidst macroeconomic uncertainty. SoFi Bank N.A. demonstrated strong financial performance, generating $63.1 million of GAAP net income at a 17% margin. Enjoying the video so far? Be sure to join our Discord community to connect with other like-minded investors. In the second quarter, SoFi experienced significant financial growth, with total GAAP net revenue surging by 37% to $498 million, compared to $362.5 million in the same period last year. Adjusted net revenue also saw a 37% increase, reaching $488.8 million, up from $356.1 million in the previous year's second quarter. The company achieved a record adjusted EBITDA of $76.8 million, representing a remarkable 278% rise from the second quarter of the previous year when it was $20.3 million. During this quarter, SoFi reached several key financial milestones, with adjusted EBITDA surpassing share-based compensation expense for the second consecutive quarter. Moreover, the financial services segment showed significant progress, improving its contribution loss to $4 million, in contrast to $24 million in the first quarter of 2023 and $54 million in the second quarter of 2022. This improvement reinforces the company's confidence in achieving positive contribution profit across all three business segments by the end of the year, and overall GAAP profitability for the company by the fourth quarter of 2023. The company's GAAP net loss for the second quarter of 2023 decreased to $47.5 million, a notable improvement from the net loss of $95.8 million recorded in the same period last year. During the second quarter of 2023, SoFi witnessed strong year-over-year growth in both its member base and product offerings. The company added a record-breaking number of new members, totaling over 584,000, resulting in a significant increase of over 1.9 million members, or 44% compared to the end of the second quarter in 2022, reaching a total of over 6.2 million members. In terms of products, SoFi introduced nearly 847,000 new ones during the second quarter, bringing the total number of products to over $9.4 million by quarter end, which represents a notable 43% increase from the same period in the previous year when it was 6.6 million. Within the financial services segment, total products also saw a substantial year-over-year growth of 47%, reaching 7.9 million from 5.4 million in the second quarter of 2022. SoFi Money, which includes checking, savings, and cash management accounts, experienced a 47% year-over-year growth to reach 2.7 million products. SoFi Invest grew by 18% year-over-year, reaching 2.3 million products, while SoFi Relay saw significant growth of 90% year-over-year, reaching 2.6 million products. Lending products also demonstrated growth, increasing by 25% year-over-year with a notable contribution from the continued record expansion of personal loans. Lastly, the technology platform-enabled accounts saw an 11% year-over-year increase, reaching a total of 129.4 million. In Q2 2023, SoFi's lending segment showed strong growth, with GAAP and adjusted net revenues reaching $331.4 million and $322.2 million, up 29% from the same period in 2022. Higher loan balances and an expanded net interest margin drove robust net interest income. Contribution profit rose by 29% to $183.3 million, with a healthy contribution margin of 57%. Total origination volume increased by 37% year-over-year, mainly driven by strong demand for personal loans. Record personal loan originations of $3.7 billion, up 51% year-over-year and 27% sequentially, resulted from investments in technology for efficient application to approval processes and rigorous risk controls, ensuring high credit quality and strong returns. However, the student loan volume in the second quarter amounted to over $395 million, which still reflects the uncertainty surrounding federal student loan payments. On the other hand, home loan volume for the same period was over $243 million, showing a 27% decline year-over-year but nearly tripling sequentially. This growth is credited to the benefits of the technology platform and increased overall loan capacity from the acquisition made at the beginning of the quarter. The technology platform segment achieved record net revenue of $87.6 million, up 4% year-over-year and 13% sequentially, driven by strong contributions from Galileo and Technisys. Contribution profit was $17.2 million, with a 20% margin, showing a 21% decrease from the previous year but a modest improvement from the prior quarter. The segment witnessed robust adoption of new products, including Connecta and the Payments Risk Platform, which leverages transactional data to reduce fraud. The financial services segment reported remarkable growth, with record net revenue of $98.1 million and a 223% increase from the previous year, fueled by substantial growth in segment interchange revenue and net interest income. The segment's contribution loss improved by $49.4 million compared to the prior year quarter, now at $4.3 million, reflecting positive variable profit for the second consecutive quarter. This was attributed to improved monetization and increasing operational leverage as the business scaled efficiently. Annualized revenue per product grew significantly year-over-year and sequentially. In the second half of 2023, SoFi's management anticipates adjusted net revenue of $1.025 to $1.085 billion, representing a year-over-year growth of 19% to 26%. They also expect adjusted EBITDA of $180 to $190 million. For the entire year 2023, management projects adjusted net revenue in the range of $1.974 to $2.034 billion, up from their previous guidance of $1.955 to $2.02 billion. Similarly, full-year adjusted EBITDA is expected to be in the range of $333 to $343 million, up from their prior guidance of $268 to $288 million. This would result in a 40 to 44% incremental adjusted EBITDA margin. Management foresees a more substantial portion of the second half's adjusted net revenue and adjusted EBITDA being generated in the fourth quarter. They aim to achieve expected GAAP net income profitability in the fourth quarter, and as a result, share-based compensation and depreciation and amortization expenses are expected to be slightly higher in the third and fourth quarters of the year compared to the reported levels in the second quarter of 2023. During the quarterly earnings conference call, management will provide further details on the guidance for the second half and full year 2023. They haven't reconciled forward-looking non-GAAP measures to their corresponding GAAP measures due to uncertainties in certain market-related assumptions and costs beyond their control, which could significantly impact the reconciliations. Remember that this is not financial advice and you should always do your own research and make informed investment decisions. That was all for today. Let us know if you think this stock will make you rich or not in the comments section. Hit like and subscribe to our channel $1 World for more such penny stock videos, and we will see you in the next one.